In this video, I'm going to break down one of the most critical concepts every trader needs to understand. It's called the smart money concept. So, who are the smart money? These are the big players with deep pockets, institutional investors, hedge funds, and banks. Thanks to their massive capital, they're the ones moving the price. If we can learn to read their behavior, we can trade alongside them instead of against them. The problem is, most retail traders don't even notice the manipulation smart money use every day to profit off of us. Let's break it down with a real example. Check out the daily BTC chart. The price hits a level, bounces, and rockets upward. That's a neon sign screaming that demand is crushing supply in this zone. Mark that spot because it's gold. When the price swings back to this level, savvy traders can jump in for a high probability entry. This is how you cash in on demand and supply zones. They're like support and resistance levels on steroids. But let's zoom in for a closer look. Support and resistance form when the price retests a level at least twice. For instance, on the chart, we see the price drop, rise, drop again, hit the prior level, and then climb back up. Since it tested that level twice, we can call it a support level. The same logic applies to resistance levels. Now, let's talk about how demand and supply zones come to life. On this chart, the price explodes upward. That's a tidal wave of liquidity flooding in, with demand overpowering supply. Because of this, we can draw a demand zone at that level. That's it. We just need to identify areas where the price made a significant move. The same goes for resistance zones. Now, let's move on to the second smart money concept, called market structure. This is about understanding the current market's behavior and direction. First, the price rose, then dipped, but stayed above the previous price lows. Then it climbed again, breaking past prior highs. After that, it pulled back but held above the last low. This creates a pattern of higher highs and higher lows. The same concept applies in reverse for downtrends. Why you waste time trying to grow a small account? With HashHedge, you can trade with real capital up to $100,000. It's simple, take the challenge, prove your trading skills, and get funded for real. Keep up to 90% of the profits. You don't need bigger profits, you need bigger capital. All the details are in the description below. Finally, we can dive into the third smart money concept, called change of character. The first step in our trading strategy is identifying the trend. On the chart, we see the price trending upward, holding above prior lows after pullbacks, then continuing to rise, forming a breakout structure. It keeps making new highs and lows, creating another breakout. This is the fingerprint of an uptrend. After some analysis, we spot several demand and supply zones. Once those levels are locked in, it's go time for finding our entry. The price corrects and enters a demand zone, so we open a buy trade. We place the stop loss just below the demand zone. The take profit goes at the nearest supply zone. Let's sum it up. If there's an uptrend, we only look for buys. Identify key demand and supply zones. Wait for confirmation, then enter the trade. If you found this video helpful, give it a thumbs up and subscribe. Thanks for watching and see you in the next video.